In New York City, basic survival for a single person now costs over $90,000 a year. Meet the median American earner bringing home $54,000, struggling to keep the lights on. Now meet Alicia, a project manager earning $112,000. To the naked eye, she's made it, but she is drowning in the exact same financial panic as someone earning half her wage. This isn't bad budgeting. It's the prosperity illusion, a designed psychological architecture that ensures your six-figure salary evaporates before it ever builds wealth. The banking cartel is betting you'll never notice the extraction mechanism hidden in your own psychology. I'm going to decode exactly how they gamify your biology to drain your accounts, prove it with hard data, and hand you the lifestyle anchor framework to finally sever their hold on your money. Here is what they don't tell you about that promotion you're chasing. The financial system relies on a biological glitch called the hedonic treadmill to keep you profitable to them. They know that when your income jumps, your emotional baseline shifts almost instantly. You don't feel richer. You just feel normal at a higher price point. This isn't an accident. It's an extraction strategy. The system needs you to believe that $100,000 is a finish line. It isn't. The Bureau of Labor Statistics December 2024 data reveals the median U.S. salary sits at $54,000, while the average is around $77,000. But crossing that six-figure threshold doesn't grant you immunity from the trap. In fact, it makes you a juicier target. Civic Science's January 2026 analysis proves 76% of Americans have little to no financial safety net. That figure includes millions of high earners. The system has engineered a reality where earning more doesn't equate to keeping more. They want you running faster just to stay in the same place, generating transaction fees, interest, and consumption tax every step of the way. Consider the mathematics of this trap in a major metro. Go Banking Rates Q4 2024 data proves a single person in New York City needs $7,608 a month just for necessities. That is $91,000 a year of post-tax income simply to exist. If you are earning $100,000, the system has already mathematically confiscated your ability to build wealth before you pay a single bill. You are not a high earner. You are a high-volume conduit for their cash flow. Let's look at the human cost of this extraction. Meet Alicia. She's 32, works as a project manager in New IC, and earns $112,000. To the naked eye, she is an economic success story. But there is a lethal discrepancy between her paycheck and her peace of mind. Alicia's prosperity illusion is blinding her to the math. While the median earner stresses about rent, Alicia stresses about standard upgrades, the nicer apartment, the social dinners, the travel, expectations. Over the next 10 years, if nothing changes, Alicia will cycle through over $1.1 million in earnings and have zero to show for it. Alicia isn't irresponsible. She didn't blow her money on luxury cars. She's being hit by the illusion, the silent normalization of extreme costs. She pays her $2,592 rent, covers her $7,608 in essentials, and supports her parents. The inputs are massive. $112,000 a year. The output is zero. The system has successfully calibrated her lifestyle to match her income perfectly, ensuring she remains a permanent hostage to her next paycheck. The banks are counting on you to blame yourself. They want you to think, I just need to make more. But more money poured into a rigged bucket just leaks faster. This brings us to the mechanism that makes the treadmill inescapable. The system has a dirty secret. Inflation isn't just about the price of milk. It is a two-front war against your wealth. There is structural inflation, the rigged prices of assets, and behavioral inflation, the social programming to upgrade. Let's expose the structural rigging first. You aren't imagining that rent is eating you alive. Fortune and LISEP's January 2026 report proves rent costs for the 40th percentile have skyrocketed 125% in the last decade. That is not a market fluctuation. That is wealth transfer. The asset-owning class is extracting 125% more from your labor for the exact same 4 walls. While you fight for a 3% raise, the cost of existence is sprinting ahead by double digits. Because of this structural squeeze, your ability to save is being systematically eroded. Federal Reserve data confirms the personal savings rate has collapsed to just 4.7% of disposable income. This is the financial equivalent of running an engine with no oil. The system loves this. A consumer with no savings is a consumer who must use credit, must accept fees, and cannot say no to bad terms. They have you exactly where they want you. Vulnerable. This vulnerability is widespread. Bankrate's 2026 data confirms 54% of Americans are saving less for emergencies than they were a year ago. You are surrounded by people who look wealthy, but are functionally insolvent. The guy with the new lease? Insolvent. The coworker with the constant vacations? Insolvent. They are playing the game exactly how the algorithm designed it. Let's audit Alicia's life to see how this invisible enemy attacks. On paper, she got a $10,000 raise last year. Where did it go? It didn't go to her freedom. It was annexed by the system. Her rent bumped up. Her standard for social outings shifted from happy hour to dinner. Her travel requirements went from domestic to international. The system absorbed the entire $10,000 before she even saw it. She intended to save, but the result was zero. Her lifestyle expanded to fill the container of her income, exactly as designed. Comment below with your city and if you've felt this inflation squeeze, where a raise felt like it disappeared instantly. So how do we break the extraction cycle? The system bets on your inertia. They bet you will blindly upgrade your life every time you get a raise. We are going to take the other side of that bet using the lifestyle anchor method. This isn't about cutting coupons. This is about changing the physics of your financial life. The concept is simple. You must anchor your spending to a previous salary level, not your current one. When the system hands you more money, you treat it as capital, not income. The banks profit from your laziness. Park your cash in a standard account, earning the national average of 0.39%, and you are donating wealth to them. But the moment you wake up, the math changes. Bankrate and Fortune data from January 2026 shows high-yield savings accounts paying between 4.20% and 5% APY. Varo, Newtek, OpenBank, these aren't secrets. They are tools the system hopes you ignore. Here is the calculation that scares the banks. Let's look at Alicia again. She gets another $10,000 raise. The prosperity illusion tells her to get a better apartment. The lifestyle anchor tells her to freeze. She keeps her lifestyle exactly where it is. She takes 30% of that raise, $3,000, and automates it immediately into a 5% high-yield savings account. She doesn't even see it. Then she looks at the opportunity cost. If she invested that raise instead of eating it, the difference is staggering. S&P Global data shows the S&P 500 returned 25.02% in 2024. By consuming that raise, she isn't just spending $3,000. She is destroying tens of thousands of dollars in future compounded freedom. The lifestyle anchor transforms Alicia from a hostage to an owner. Instead of a zero bank balance at the end of the year, she has a $3,000 fortress earning 5% interest. She has broken the dependency on the next paycheck. She has created a gap between what she earns and what she burns. That gap is where your freedom lives. We have decoded the game. We exposed the prosperity illusion, the psychological trap that keeps high earners broke. We revealed the invisible enemies of structural and behavioral inflation that steal your raises. And we laid out the lifestyle anchor method to reclaim your capital. Tonight, do not sleep until you have checked your interest rate. If it is starting with a zero, you are being robbed. Move your emergency fund to a high-yield savings account. Within 30 days, calculate your anchor number, the salary you can live on comfortably, and automate every dollar above that into assets, not liabilities. Make this your system. If you are done being a battery for the banking cartel, subscribe. Next week, we're going deeper into the specific investment vehicles that turn that anchored savings into generational liberty. Join the resistance against algorithmic extraction. This video is for educational purposes only, not personal financial advice. All data is from the Bureau of Labor Statistics, Go Banking Rates, Fortune, and the Federal Reserve as of January 2026. Products mentioned are examples, not recommendations. Consult a licensed financial advisor for your specific situation.